The bad news continues in the crypto world as Binance comes under even more fire. Brian Armstrong also takes on a little bit of fire, and amidst all that bad news, we have some good news as the stock market rallies in the United States. We'll discuss all of that right here today on Pour Over Finance. What's up, guys, and welcome to Pour Over Finance. I am Aaron. Before we get started, I just want to make mention in the description you will find timestamps that will get you to the specific topics that you're looking for. I also want to ask you to please go ahead and hit the thumbs up button, like the video so that the algorithm can show me some love. Hit the subscribe button if you like the content that I make and you want more of it, and the notification bell will get you notified of when I am uploading. Without further ado, we're just going to go ahead and just start right in here. The markets are up. Things are looking good for the stock market, and we'll discuss that in a little bit. Things are not looking bad considering all the bad news in the crypto industry. Bitcoin is holding steady, currently at 26,500. We got Ethereum again holding steady, 1858. You would think you would see major downflows in terms of the overall crypto market, but it took a little hit when all of the bad news with the SEC was coming out, but it is bounced up a little bit and has remained steady, so that's at least a positive thing. But let's get right into our first article today, which is Binance. I reported this a little while back in regards to the reports that Binance is commingling their funds with their customer funds. And I don't know what the actual reason for this would be, but this is what the SEC is claiming. In the article that we have here, it says Binance moved billions through the U.S. bank accounts controlled by CZ, says the SEC. The filing claims that Binance entities commingled funds and funneled them through a Paxos affiliate through Marriage Peak, which was controlled by Changpeng Zhao, which is CZ Binance. In the article, it says billions of dollars of Binance-related funds routinely flowed through Signature and Silvergate for years, according to these documents which were filed on behalf of the SEC. It says that the two institutions catered heavily to the crypto clients before they were shuttered in March, and each bank operated its own round-the-clock payments network, which allowed customers to settle digital asset transactions. You know, the crypto industry never sleeps. An SEC review of the financial records, including bank statements, wire transfers, found that Binance CEO, CZ Binance, I'm just going to call him that because that's a long name, Changpeng Zhao, and BAM Trading Services, the operator of Binance US, held numerous accounts at Silvergate and at Signature Bank. So they're basically saying that the funds of the customers, as well as any kind of earnings from Binance, were being commingled, and the SEC is going after CZ as a result of this. Further down in the article, attached to an email address identified as Solutions at Binance, Merit Peak's Silvergate bank accounts received $22 billion in deposits between 2019 and 2021, the SEC claims. Of that, $21.9 billion was paid to foreign affiliate Paxos, the former issuer of BUSD, which was Binance's stablecoin. The New York firm stopped minting the Binance-branded stablecoin in February at the direction of regulators. So things just continue to look bad for CZ. I don't necessarily know that by the end of this year there will be a Binance.us. The U.S. jurisdiction, or the U.S. version of that company, I always thought was under regulation from the United States in some manner or another, and that was the reason why they were able to do business in the U.S. But as more and more news comes out, it kind of seems like there was a lot of underhanded things going on. CZ himself is denying all of these claims, and I know that there has been some sort of a warrant out there. I don't think it's an arrest warrant, but I think it's for him to appear before the U.S. courts, the SEC. As more of that information comes out, I will definitely be sure to bring it to you guys. But I know that Binance has started to delist some of their peers in terms of things like BUSD and DOT, things like that. They started delisting, and this all started after the SEC pretty much sued them for all of these securities. So things are seeming a little bit underhanded, a little seedy. I don't necessarily know that the SEC is in the right or in the wrong, and I don't necessarily know that Binance is in the right or the wrong. This is why we have a court system. If they truly are doing business the right way, then they should have all of the necessary paperwork to prove that, and they should be able to prove that in a court of law. I don't know how this is going to turn out, but I don't know that I trust either party. I don't trust the US government, nor do I trust just random people who run exchanges, which is the reason why you self-custody your crypto, because quite frankly, having all of your assets controlled by a third party kind of removes the need for crypto. That's the reason why Bitcoin was created in the first place, to put the power in the hand of the people. So trusting your money and trusting your assets to a third party kind of doesn't work for what crypto is for. You're kind of going against the grain of what it's here for. So as more of this information comes out, like I said, I will be bringing it to you guys. And as CZ continues to be in trouble, a little bit of heat came the way of Brian Armstrong because it was alleged that he sold shares of Coinbase before the SEC made it public that they were going to sue them for the listing of unregulated or unregistered securities. And in the article, it says here that Coinbase's CEO stock sale was probably not planned to occur a day ahead of the SEC suit. So they're saying, hey, there was no foul play here. This is just a process that was going to happen regardless of Coinbase being sued or not. It just happened to work out that way. It says Armstrong was selling shares under a plan set up in August that sometimes made him money and other times it did not. The June 5th sale was still good timing. It was just good timing. It was a coincidence, so to speak. Let's read on in the article here. It says Coinbase CEO and founder Brian Armstrong sold company shares the day before the United States Securities and Exchange Commission, the SEC, filed a complaint against the exchange for security law violations. It says that the transaction caused a minor stir in the Twitter cryptoverse as Armstrong avoided a sharp loss by doing so. There's a tweet right here. It says Coinbase's CEO Armstrong dumped 29,730 shares on the 5th of June, just a day before the suit, which was made public, and shares tanked 20%. And that's exactly what it says here, that it tanked 20% after this lawsuit was made public. So it almost made it seem as if he was selling in order to avoid what he knew would have been losses for the company. But in the article, we'll read on. It says Armstrong has been selling Coinbase stock regularly since November. He has made the trades under a 10b5.1 plan adopted in August, which determines the timing and size of transactions in advance. A comparison of Coinbase's stock price with Armstrong's trade date shows that his trades were not always profitable. So he's lost. It says, thus the trade could have been set up before, and the news of the SEC action was known to Armstrong. The SEC, on the other hand, could have been aware of Armstrong's trading algorithm. So it doesn't seem like anything foul was at play here. It's just coincidental that this automated sale of his shares took place the day before the suit. But they're saying that the SEC could have known about the algorithm and purposely did this to make it appear as if Brian Armstrong was involved in potentially selling his shares before the lawsuit, which would make it seem that he knew this was coming, sold, and then the stock tanked, which in turn would make him look like an evil demon because he knows that it's going to tank, so he sold to avoid losses while everyone else who's invested in coin shares is taking losses. They're saying that's not the case. This is an automated process. However, the SEC could have been aware and did this purposely to demonize him in the long run. I don't know. It's so hard to believe any of the people involved in any of the things that we've been reading recently. It's hard to trust someone who is as wealthy and as big as Brian Armstrong, and it's extremely hard to trust the United States government. So we'll just have to take it for what it is and believe that this automated sale of his shares took place right before the SEC decided to make their lawsuit public, and not that he was involved in insider information selling his shares before everything goes public and then allowing people invested in coin shares to hold the bag, so to speak. All right. So with all that bad news in the crypto world, all the doom and gloom in the crypto world out of the way, we'll move into just a little bit of positive news before we end off here today. It says that stocks rise. The S&P 500 enters a new bull market. I don't necessarily know that we can start calling it a bull market. We still have a looming recession on the way. I don't necessarily know that there will be a recession, but it's looking like there could be. Even the United States government has kind of alluded to the fact that there may be, and we'll have to wait till all of the CPI data numbers come out next week. But later this year, we could be looking at least a minor recession, but let's read on to what the article says. It says stocks ended the day higher. The S&P 500 entered a bull market on Thursday as investors digested fresh economic data ahead of next week's Federal Reserve meeting and leadership shakeup at GameStop. So GameStop released their CEO. They haven't been doing well. I mean, come on, it's GameStop. Who's still buying video games at GameStop? Everything is online now. You don't need GameStop. But let's continue. The S&P rose 0.62%, while the NASDAQ popped 1.02%, and the Dow Industrial Average was up by 0.50% or 1.68 points. The S&P 500 has now increased more than 20% from its October 2022 lows. So the stock market is doing well. I mean, 20% increase from the lows in 2022. And I remember looking at my account in 2022, just around November, where things were completely flatlined. It definitely is up from that. So at least we have some positive news going on, at least in the traditional markets here. I wouldn't go as far as to say that we're in a bull market. Again, we have a potential looming recession on the way at the later end of this year. And I don't necessarily know that you can start calling a bull market this early in the cycle. Let's see where we stand at least October of 2023 before we start calling for bull markets, because of the stock market being up 20%, not for a very long time. Anything can change. Let's see what happens first. Anyway, guys, that is what I have for you today. I am Aaron. This is Pour Over Finance. Again, as I mentioned before, please go ahead and hit the like button so that the algorithm can bless this video and get it out to more people. If you enjoy the content that I make, please subscribe. There will be more. And if you hit the notification bell, you will actually be notified of when that more happens. So I appreciate you for spending your time with me this evening. Go ahead, sound off in the comments. Let me know what you think about Binance, what you think about what's going on with Armstrong, and do you think we're entering a bull market, or is it too soon to call that? Go ahead, sound off in the comments below. I appreciate you spending your time with me today, and have a good one. Peace.